It's not every day that Warren Buffett, the most famous optimistic investor in American history, makes a move that looks like he's hedging against the very system he's built his empire on. But that's exactly what just happened, and if you care about your money, now is the time to pay attention. Warren Buffett is stepping away as CEO of Berkshire Hathaway, but before doing so, he left something far more important than a farewell message, and it was a warning. A direct data-driven signal that he sees major risks ahead, not just for the US dollar, but for the broader market. And here's the thing, Warren Buffett isn't a doom and gloom kind of guy. He's calm, measured, strategic. So when someone like him starts making bets against the dollar, it's not about fear, it's about preparation. That's the mindset every smart investor should be taking right now.
We wouldn't want to be owning anything that we thought was in a currency that was really going to hell. And that's the big thing we worry about with the United States currency. The value of currency is a scary thing.
It's what I teach in my Discord, and it's what I've been practicing for years as I strive to be someone that could be even close to Warren Buffett in terms of safety, growth, and skill, which takes a lot. If you guys enjoyed this content and you're looking to grow your portfolio, you can join my Discord at any time. The link is in the information box below. So let's break it down on what's going on and what we can do about it. Warren Buffett's bet isn't just about stocks, it's about currency. One of Warren Buffett's biggest recent moves was his massive investment in 5 major Japanese companies, more than $20 billion worth. But he didn't buy them in just dollars. He used Japanese yen. That wasn't just a stock trade, that was a currency decision. Back in 2003, Warren Buffett did something similar. He warned about the dollar's long-term weakness, placed a bet using foreign currencies, and came out ahead. While U.S. stocks limped along for a decade, Warren Buffett's bet earned Berkshire billions. Now he's doing it again. This isn't a repeat, but it does rhyme. And history suggests that we should pay close attention to when he makes moves just like this. What's driving the concern is U.S. fiscal policy. And at the heart of all of this just isn't inflation or interest rates, it's fiscal policy. Government spending versus revenue. For decades, the U.S. has run budget deficits, but the scale has exploded. In 2020, the government borrowed nearly 15% of GDP, and while that was during a crisis, spending has stayed elevated ever since. This year, the deficit is $1.3 trillion, and here's the issue. More and more of that money isn't going to build roads, improve schools, or spark innovation. It's just going towards interest payments to finance the debt. Just maintaining this debt. In 2019, 8% of the budget went to interest. By 2024. And if nothing changes, that could grow to 27% by 2040. That's more than a quarter of the budget gone before a dollar is spent on progress. That's not just unsustainable, it's downright dangerous. The dollar's global strength is slipping. The US dollar has long been the world's dominant currency, trusted, stable, and used around the globe. But the status isn't guaranteed forever, and Warren Buffett is raising the alarm again, just like in 2003. And one key signal is the DXY index, which is something else I teach my students in Discord, very important to understand, which measures the dollar's strength against the other global currencies. When the DXY falls, it means the global investors are losing confidence in the dollar, and that matters. Because when the dollar weakens, foreign investors often pull away from US stocks. Even if the stocks go up, the weaker the dollar can erase those gains for them. That can trigger a cycle. Less global demand for US assets, lower the stock prices, and rising pressure on the economy. So who holds the debt and why that matters? Another major risk, who owns US debts? Countries like Japan, China, and the UK hold hundreds of billions in US Treasury bonds. Japan alone owns over $1 trillion. And here's the interesting part. That's also where Buffett is now investing heavily. This isn't random. Japan's currency is historically stable. Its companies are strong. And if global investors start to lose trust in US debt, and countries like Japan may become safe haven. Buffett isn't just diversifying, He's insulating against a breakdown in trust. And when the same country you're investing in is also holding your country's debt, you better hope they don't walk away. So what could set all of this off? Right now, all of the conditions are in place. Unsustainable spending, rising debt, weakening dollar. It only takes one spark: trade wars, interest rate shocks, tariffs, which Buffett has recently described as an act of war to some degree. No one knows exactly what will trigger the shift, but when the trust that holds this system together starts to crack, things move fast. 3 steps to protect your portfolio, and this is important to understand. I also explain this in my Discord and teach it, so if you're looking to grow your portfolio, maybe you're new in the market, maybe you're losing money, or you don't know where to begin, I would love to help you. It's what drives me every single day. You guys can click on the link in the information box below to get started in the Discord. So what can everyday investors do? Here's a 3-part approach that mirrors Buffett's strategy, but adapted for real-world portfolios. 1, diversify internationally, which I teach my students. Most investors are overweight in US stocks. That's fine in a bull market, but risky when the dollar is under pressure. International ETFs like VXUS and VEU, IEUR, VXG, and also DXJ of Japan or region-specific funds offer exposures to more stable or undervalued markets. Number 2, you got to balance your exposure. Don't panic sell US holdings, but don't bet your entire future on one economy either. Diversification reduces volatility and adds resilience to your portfolio. This is something else I teach pretty heavily in Discord. Number 3, build your cash and flexibility. Buffett is sitting on a record cash pile. That's not fear, it's optionality. Cash allows you to buy when markets fall. It's dry powder for opportunity. And this is something else that I teach a lot. My current portfolio in one of my accounts that's almost $750,000 holds almost $700,000 in cash, and my big portfolio is several million in cash. This is something I also teach, to have at least 30 to 50% of your portfolio in cash for opportune moments of buying. The market is heavily manipulated. You don't want to have overinvestment, and you definitely don't want it in one economic specific sector, and you don't want to have it in one specific economy like America. And you definitely don't want to have more than 10% in one stock or in one sector. I had many students that joined my Discord that had all of their portfolios, hundreds of thousands of dollars, in just American stocks, and most in tech. So mostly in one sector, in one economy. You want some US tech, some US financial stocks and growth stocks. You want some in ETFs in foreign currencies like DXJ, VGK. And you may want some in SPHD, which is the high dividend yield, low volatility S&P 500. There is a lot of ways to diversify your portfolio and protect yourself against the downside. Now, does this mean that Warren Buffett's signaling that this is definitely going to happen? Well, absolutely not. In fact, it's probably more on the unlikely side, but you want to prepare yourself financially and you want to trade safe so that in the event of a downturn, you're not bag holding and losing lots of money. This is the key, and this is what I teach. You have to be safe. You want to have slow, safe, consistent, passive growth. This is the important and safe way to trade, and you have to understand economy. No one understands economy better, arguably, than Warren Buffett himself. At the end of the day, you have to do your own due diligence and take steps to protect your investments in your portfolio, because we're here to make money, not lose money. And in order to do that, you have to play things safe. This is something that is very important to understand. You don't want to invest in more than 10% of your portfolio in one stock, and you don't want to be in just one sector. You want to diversify. Something else you also have to understand is that over-investing and under-investing are equally damaging. If you under-invest, you lose potential profits. If you over-invest or over-leverage, you lose money. So you have to understand the balance. I teach a specific strategy called the 33-10 rule, which allows you to dollar cost average multiple times while retaining an under 10% investment, which is very safe, giving you a better average cost and allowing you to exit with more profits. And I pair that with my custom designed AVP and stochastics training and double fib, which are exclusive to my training in Discord and really help my students make the most out of situations that would otherwise be difficult. And something else, so if you want to make profits like you see on the screen, and you guys want to up your game and you want to learn to trade better, Maybe you're looking to retire. That's what drives me every single day, is to help others just like yourself. When the market went down in March, lots of people were panic selling. They were getting stopped out, and there was a lot of margin calls. I told my students to hold positions, add money into their account if they had to, so they could prevent margin calls, that the market would be okay. Look what happened. The market ran just when I said it would. There's videos here on YouTube where I explained the market would run back in March and April, and I said May 2nd it begins, and it did. From May 2nd to the middle of May, it was a bull run and a pretty big jump. Just like Wayfair. I told everyone to take Wayfair back in January and February. It went down to $36. Now it's back up to $41, $42. It even peaked at $43. And it's going to continue to go up as tariff talks get better. All of my stock picks have done well as long as you held and you knew when to exit. I made $20,000 on Microsoft, and many of my students did as well, because we took that trade in March and we got out at the beginning of May and made a lot of money. Wayfair, we made a lot of money. AMD ended up printing for most of us who got in early enough and were able to get out when it ran back about 3 weeks ago. And there's a lot of other trades we took. But if you're interested in joining Discord so you can make these kinds of profit, I'd love to help you guys. The link is in the information box below. Just remember, like Warren Buffett has said before, and his actions dictate, you want to hedge risk and you want to also diversify, not just among stocks, not just among sectors, but you also want to diversify amongst economies, foreign as well as national. Thanks so much for being here, guys. I'll see all of you on the next upload. Take care, fam.